All right. Good morning, traders. Happy Sunday. I hope you've been having a wonderful weekend. We're going to give it a minute or two here as we allow stragglers to join us, audio to get connected. Feel free to let me know if you can see my screen, hear me okay. We're ready to go. Thank you very much, Gray Lynn, and welcome. Welcome out. Your name looks unfamiliar. I don't know if you've come before and I didn't notice, but if I did, I apologize. But welcome to the group. Glad you could come out. Sunday is my favorite day. I'll just put it out there. I put it out there every week. I love Sundays. Right? We use a little analogy in this group. You'll hear it over and over. We talk about there being three components to our internal workings, right? To how our brains work as we look at and incorporate trading psychology into what we do. And those three components break down into the professor, the chimp, and the computer. So our brains are and this is legitimate from like brain scientists that wrote a book. It was a very interesting book that I shared with my kids around sports psychology. But I liked the analogy, right? So some parts of our brain are very automatic. That's the computer, right? The part that follows heuristics, rules of thumb that allow our brains to process so much information all the time and make fast decisions. Then we have the professor, and that's the logical, the rational, the thoughtful, the deliberate, careful planning. And then there's the chimp, and I think we all know what the chimp does, right? uh, so Sundays I love because the chimp's asleep in the cage. The professor's just relaxing with his coffee or her coffee. And this allows us to process the market in this way and create the tone that we carry each week into trading. It allows us to make better, faster decisions in our trading when we have this type of an understanding of our market conditions. So, with that in mind, welcome to the Market Watch Group Weekly Market Prep. And I am Scott. I'll be your host, as always. Although we will have with the options, so Tuesdays, Thursdays are options for the next 2 months, all of March, all of April. Our Tuesday, Thursday evening sessions are dedicated towards options. If you missed the first two, go watch the recordings. I'll make sure that you have the links to prepare, and then this next time we're going to be doing a lot of building trades in the model so that you can watch how we set them up and how they look and how they're going to behave and really understand those trades deeper. The Friday recording did not come through for March 8th. The afternoon session didn't. Let me take a look. I'm having some issues with the emails for some reason. Um, Full disclosure, no, Stephen. But with good reason. All hands are on deck because we're really the SMS. We're on the final leg. We're really trying to get the alerts out this week, and so there's been a lot of behind the scenes making sure that we're ready to get the alerts out and doing what we have to do to initiate that because I've been talking about it too long. So we're really trying to get that feature out. So I have a good reason this time. It will be there. And my daughter showed up early from spring break from college, so I was very excited about that. Um, the Graylin, all of the recordings are on YouTube and linked, and so I actually will just share one link with you, and you'll be able to go in there and find. But you can go to our YouTube channel. I'll put some links today at the end. I'll make sure you have a link to the content library. I'll make sure you have a link to the YouTube channel because there's a lot of content in there. All right, you saw the disclaimers. They're the usual. Here's the agenda: market posture. We're going to go through, talk about what we see in the conditions, what's changed, what stayed the same, what are our concerns, what does that mean in our implications of how we're trading. We'll look at the economic calendar to make sure we understand what's coming up this week. So last week we had labor, and labor market looks great. Everything's good there. Market's still kind of showing some signs of iffiness, but remember we said that late February, early March has a historical cyclical tendency to have a little bit of a grind at this period of time before we get that bounce out and it kicks into that what we hope to be a nice bullish March and April. So I'm not concerned about that. But we will look at this week's data, and this week's data is inflationary data. Well, the Fed came out and basically said they are looking to cut this year. They're not they I think they catch wind of what people are saying, and someone fairly prominent came out and was like, they may not cut at all. It's like, well, now we went from they're gonna start cutting in January and cut it 2.5% to they're not going to cut it all. This is like, relax. Let's find some middle ground here, right? Let's okay. We might get 3, maybe 4 cuts, quarter of a point each. It may start in June. We'll look at the Fed here in a second, but they said it's going to rely on inflationary data. It's got to keep coming down. If it stalls, they're going to leave it. If the inflationary data comes down, that's going every time we get an inflationary read, and we know the 3 core reports that we're looking at are PCE, which we just had a couple weeks ago. That one came back good. We have CPI and PPI, and those were the ones that had a little bit of a hiccup last report, and those are the ones that we're getting. You'll see when we look at the economic calendar this week. We might look at our sectors to see if there's anything we want to add to our watch list. We want to do some watch list maintenance and then see if there is an early week list of symbols that we think may be setting up for a trade. Okay, let's get into it. And yeah, ask questions along the way. So, Graylin, as you're new today, this process might feel a little bit like drinking from a fire hose. There are videos that will walk you through the whole process as a cumulative, and then it actually breaks down. We're going to go through a market posture that's 6 components, and the videos break down each component. And it's actually something that we work on, and will be easier as you get into it and have those videos at your disposal. So here's where we're at. This was last week. This was our posture. You can see that we're at a 7. That's the highest we've seen all year since last year. It's been positive. It's been in the 6s and 7s basically through all of March, or excuse me, all of February into March. Really, even in January, we had that little stumble, but we've been bullish. Remember, this is out of a 10-point scale. If you ever want to know the scale, it's these little numbers here. This is what each of these components is worth to give us a total of 10. Let's start with the long-term trend. So let me scale this back, 3-year weekly. Now, this is not the long-term trend this right here, you can see these two lines. That's my short-term trend showing up on my long-term chart. So it's showing us how does the short-term play relative to the long-term. But the long-term are these lines. We had these established here, but we broke out. Now we're looking at these red lines. Why did I leave those black ones? Because they can actually be very, very useful in how we score things. Now that we have these red, if we have a pullback, it might only pull back to the top of this black line. And you'll see that the way that these things play off of each other is it's nice to have a historical representation of what was I thinking? What do I think now? Is this changing? No. Remember that we've already scored it and given it extra credit for breaking out twice, broke here, broke here. It's holding the breakout. It broke, moved a little higher. We had a doji last week on this chart. Everything looks fine here. There's no change. The only thing as we ride along the upper level of our trends, the only thing we would possibly think about here would be raising our score. That's an important thing to note. If this starts to pull back, we're not lowering our score. We're scoring this relative to this trend, which means it could pull back all the way to this red line, and we're not going to change our score. We're scoring the trend, not the currentness. Now, if it pulls all the way back to the red line, our short-term score is going to absolutely go negative, right? That's going to happen. But just remember that our long-term can stay intact. So we're at 520. A correction, 10% from here, 52 points down, puts us around 470. 470 is here. So a correction maybe would break this red line here. A deep consolidation wouldn't. It could consolidate 8% and be sitting right on top of this trend line. So just remember, that's how the correlation between long-term and short-term, you got to just see them as two separate entities. So there we go. This is no change for me. We're at a 1.5 out of 2. That's scoring this. This is pretty strong. What we're getting here, this angle, right? And we're not sure. Is it going to pull all the way back? Is it going to give us even the ability to draw a steeper long-term trend line as we see the next cycle come through? This is what I know. Buyers are clearly in control on this perspective. The institutions are bullish right now. There's no concern from what we see here. Okay, next. The short term context. 3 points possible. We are at 2 out of 3. So yeah, again, pretty strong. Let's go back in. Let's get this back to 6-month daily. This is what we're scoring right here. These two lines. You can see that this, it's a very strong trend representation, meaning we don't have hardly any. This right here, it dropped a little below, but by the time the day was over, it was right back up in it since basically January 2nd. So not the first, the first day, right? This trend that we have right now represents 2024. 2 months and change, almost 2.5 months worth of action. And it's in this realm. Now, is there a little bit of concern because we really haven't gotten up to the upper level of this trend in these last couple of bounces? Yes, of course, that's a little concerning. I'm not going to change my score because the trend hasn't changed yet. I'm still in this level. And if you notice, our stochastics is just barely looking like it wants to go. And a red candle, you can see we had a red candle here with big volume. And the next day would have been a beautiful entry. So we can't just say, oh, it's a red candle. What are we going to do? We got to relax and see the context of this before we start to allow, right? Remember, the red candle, reacting to the red candle, that's the chimp. The professor doesn't react to the red candle. He's just like, it's a red candle. Okay. See it in context. The chimp's like, oh, red candle, and wants to smash the keyboard. It's okay. Now, we're going to see this here in a second. There is a concern with this red candle, but not in trend. In trend, all we look at is up here, right? All we look at is are we in this, and what is the angle, and how do we score the angle? But what we know is it doesn't change. That score is not changing. So I'm a 1.5, I'm a 2. These haven't changed. This is the third week in a row of it being completely stable. And you can see it's been really quite stable this whole time. We're not seeing much fluctuation. Hey, Michael, good to see you. Glad you can make it. You haven't missed much, only trend, but nothing's changed. Volume, though, and here is where my concern with Friday's candle comes in, is we have this red candle. It is an engulfing candle, and it had above average volume. So that's problematic. So let's switch this down to a 1 month daily chart. What is our volume score? So our volume score it's been chopping around a little bit. We were at a 7.5, and then we dropped, and then we dropped, and then we raised. The volume sometimes is more stable, but right now it's a little bit moving around. However, it's moving around in positive territory. So no matter what's happening, the end assumption is that buyers still have more control, more conviction than sellers. That's it, because it's positive. It hasn't fluctuated. We did have that one weird moment where it went like 0.25 to minus 0.25 back to 0.25. And I still am like, it may have been that I overreacted, but that's neither here nor there. Well, here we are now. Okay, so let's just start from the beginning. Let me get my drawing tools. Questions, comments, or concerns, just type them in. Let me know how you see it, if you would like. You agree or disagree. We do have this last selling day back here. You can see we had a gap down, heavy volume. We did get, so you can see this was not above average volume. It was, but not enough, right? We needed at least 5%. 5%'s about 3.5, almost 4 million above. So we would have needed about 78, and we only got 76. So we did not consider that above average. That was a good day. I mean, it gapped up, but the buyers didn't. But here they did. Here the buyers did. It gapped up. It wasn't a huge gap, but I feel comfortable giving it, especially since this doesn't get scored. So we gave it a 1/4 point here and a 1/4 point here. So we have this one and this one here, except we have a red. And then what? Then on Tuesday, we did have, this was 66 million average. That was above average. So we're giving that an X. Boom. Boom. Woo. So, I know it feels like 3-2. Well, it is 3-2. It is 3-2. However, that's with that being 2 days from the edge, I'm going to just kind of toss that out, and I'm going to score what we have. We have 2-2. It's a tie. 2-2 is a tie, but the rule is, and I know some of you are going to be like, Scott, you're killing me with this one. But I am going to leave it. I'm going to put it at a 1/4 of a point still. And here's why. Like I said, with this being within 2 days, I'm going to just sort of discount that. And I'm going to say what's important. And you can actually see that I feel good with this gap being representative. This is more important than what was prior to the gap. And I'm going to say that this is a tie, but tie goes here. This is a 0.25. Now, one other thing, what I want you to realize is at the start of this is a tug of war between the buyers and the sellers right here. 2-2. The tug of war started back here on this day. And it finished here, or at least this is where we are now. Where's price? Higher. During this tug of war, we ended up higher. So yeah, I give it slightly to the buyers. That's my rationale. I want to know your thoughts on this one. How are you scoring it if you're scoring it? If you're not feeling comfortable yet, give me your thoughts. Do you feel like this is what we're trying to assess with volume? Who has the conviction? It would be very hard if that's your objective with this analysis. If your objective is to understand who has more conviction, it would be very hard to see 3 selling days, 2 buying days, and say, you know what, I'm going to actually score that negative. I'm going to give it a minus 0.25. Because then the last thing that I would point out to you is what I just did point out, which is, well, wait. The first scored point for sellers is here, and we're now here. So it's very hard to say, I think the sellers have more conviction when the market has advanced 4% in that period of time. Do you think that the sellers have more conviction as the sellers push this market, or as the market went up 4%? I don't, right? And that's why I say ties go to the buyers, because yeah, when it sells, there's just always a little bit more. So an above average volume day is like a 3-pointer, and a above average selling day is like a 2-pointer. It's worth a little more, right? Because it's more significant. I hope that makes sense. But that's what my score is going to be. I'm going to leave it because I'm saying the buyers still have more conviction, and I can establish that because even in this last little tug of war they've been through, where there was a couple of above average volume days on each side, we ended at or near the high of this, not near the low of this. If it was near the low, I only see one buying day that was strong. Okay. Now, how many do you see? Above average went from here to here. Above average went from here to here. So in these 2 days, above average, right? A doji is intraday indecision, right? But when we look at a candle, we're looking at close to close. So where did the previous day candle close? Then where did the next day candle close? Then where did the next day candle? We're going off close to close, not intraday activity, right? So yeah, the buyers gapped it up. They failed to push it higher in the day, but they countered all the sellers that happened during the day, and they held the gap. Does that make sense? So a doji is a bullish day if it advanced relative to the momentum. So you're saying what's the net result? No, the net result for me, this is still a tie. Tie goes to the buyers, but we were at a half a point. So now I'm a quarter of a point. So, but the candle did change. Remember that change when we talk about a day's change. So when they're like, this was up whatever percent, that's not up for the day from its open. That's up from its previous close. So I am decreasing my score to a 0.25, but holding it positively. Right? We basically discounted this selling day, which leaves us 2 buyers, 2 sellers. Tie goes to remember that buyers got the tie. If the buyers get the tie, what does that mean? They get a quarter of a point. Positive. Michael says, I think the candle should count. Okay. If you want to count it, certainly. And if you did count it, that might take you to a 0, right? Did I make it negative? No, this is positive. It's positive. It dropped. It dropped from 0.5 to 0.25. It's less positive, but it's still positive. Does that make sense? Let me know if that's clear. So it's not as strong of a score, but we still are giving buyers the edge in this. So there you go. Let's kick this back out. That's a great discussion. But at the end of the day, here's the thing. Remember, we had different rationale, we're thinking different things, but at the end of the day, we have to apply it to what do you see? And what I see in this 1 month chart is price has advanced. If I come up with a negative score and price has advanced, I'm not saying that's impossible. That could happen. I can't remember ever seeing that. But it would definitely have me reevaluate and say, okay, how did I get there? I mean, maybe that's the early insight. But at the end of the day here, we really, even on the very last candle when we got above average volume, this is still like at the very top of this is at record highs for the S&P happening here, right? So, and I'll tell you right now, let's just kick this thing back to stuff. A lot of people have missed this opportunity. This has been a great bull run in 2024, right? We started at 472. We're at 511. 511 minus 472 divided by 472. We're up 8% in 2 months and change. And a lot of people have been like, oh, there may be a hard landing. Right? There may be a hard landing. And this too, right? I mean, really, this goes back to like, this is where we really kicked into bullish gear, was back in mid-November. And we've been bullish this whole time. We haven't been thinking, is it going to be a hard landing? Look, if a hard landing is going to show up, if a recession shows up at this point, it's a whole new recession. We had one in 2022. It's now 2024. Anyways, people scare themselves into not trading. But with the what ifs, this is what we see. We're going to keep going with it until something proves otherwise. So, all right. Let's get to sectors and major market. Major market. 200 days. What do we see here? We see the standard that we've been seeing. NASDAQ on top, right? We had this little corrective period back in late summer, early fall. Since we've come out of that, the NASDAQ has moved into a consistently leading position. That's always going to have us being at least somewhat bullish. If the NASDAQ is leading, even if the Russell is lagging, we can score this at a 0.5 point. It will be bullish, right? So it's that extra kicking it from a half to a 3/4 of a point or 1 point. This is a 1-pointer only, but it's very impactful on how we score things. Not that one, this one. That was a 1-pointer as well. 1 point on the market. So we've been at a 0.75, which means what? Which means the Russell moved into a leading position and it fell off, but it never actually fell out of leading. It really was right at if you remember back in January, we were like, if this thing doesn't stand up, we're going to have to drop our score. And it did. And then we did it again here. We're like, it's got to hold its 50. It did. And you can see we're lockstep. I don't know. It hasn't shown enough. Let's keep moving through. Here's the 133. So here's the 6 month. What do we have? We have the NASDAQ on top, S&P next. And here's our little battle for the bottom position with the Dow, nice and steady, and the Russell, nice and choppy. But it's this 66 when we start to see that the Russell has created a good deal of separation from itself. And if you remember, we said there was bullishness in the Dow. And sometimes when we see bullishness in the Dow, we think that's problematic. That could be defensive. We didn't assess it that way. We said the Dow just seems to be benefiting from this overall broad-based bullishness in the market. Now what's happening? It's slowing down. This would be expected. There's not enough money to keep pushing the Dow at the same rate that you're pushing the small caps and the NASDAQ, right? If you look at the market cap involved in those 30 Dow companies, to push them at the same rate takes outrageous amounts of money going into those stocks. They're just too big to push that way. So what are we seeing here? We're seeing them start to ease up a little bit. And then what? Now we're seeing separation from the Russell, from the NASDAQ. This is great. This is very bullish, right? This is, if we saw the Dow accelerating and the NASDAQ and the Russell dropping, we'd be like, oh, that's defensive posturing. But we're not seeing that. We're seeing actually bullish shifting that says, yeah, we're just simply not going to see the money flowing into the Dow because there's not enough of it. That's logistical. That's not sentimental or anything. That's not indicative of anything else. Okay, is it enough to score it? It's got a lead, and I feel like but it's not in a leading position. It's close. I'm getting closer. Sandy's not here today, but she probably has hers there. Let's go to the 33 and see. And here you can see more of the same, right? Here's the Russell's, the S&P's leading here. It's strong, but it's not strong enough for me. It's not strong enough for me. I'm going to leave mine at a 0.75. Has anybody raised theirs to a 1? That's the first question. Does anybody disagree that it's a 0.75? Are you only a half a point or a quarter of a point? I mean, the Dow's really just not leading anywhere. I'd have a hard time seeing this not positive, but maybe you have logic for that. Let me know. Yeah, whoops. Did I hit 33? Sorry. 22. Oh yeah, 22 makes it even worse for the S&P or for the the Dow sideways. That's my bad. Nice call out. The Russell up top. Yeah, I mean, this bodes well. If this strength in the Russell continues a little longer, then it should push that 66 day up above the S&P. That's what it takes for me. Let me go back to that. For me to put my score to a 1, this has to get back above here into a leading position. It's leading relative to the Dow, but it's not leading. It's still behind, right? That's the last piece for me. Okay. Sectors. Sectors have been strong for quite a while. You can see this goes back to, you can see in November, we were at a half a point already, right? Early November, mid-November, when we really kicked into bullish gear. This is when we kicked into bullish gear right through this point. Boom, boom, boom. And what was happening was the sector was definitely helping to contribute with this, because you can see we went 0.5, 0.75, 0.75, and then we got to a 1. So for us to get here, that was based off of what? That was based off of a broad-based 5-sector rally. We had technology, we had communication services, we had industrials, financials, consumer discretionary, and then you added healthcare, and it's just been strong the whole time. We had one little blip before healthcare started participating, if you remember, where consumer discretionary was in a little lull, and then bam, we're right back. So for me, sector rotation has been one of the strongest pieces of this market, and continues to be so. Let's go see if it is going to stay that way. So here is technology at top, communication services up top, just strong as can be. They were strong last year in the summer. They were strong this year in the early fall. They were stronger. I mean, that's just a significant amount of my trading has occurred in these areas. But most recently, and you'll see this as we start to zoom in, financials and industrials, which are up here in leading positions, have been strong. So we've absolutely been focused on those. And there's a nice, sometimes where if the technology kind of consolidates, industrials and financials are still moving. So diversification amongst sectors is definitely something that we key in on. Here you can see discretionary has caught back up. It's a little underneath the S&P, but not everything can be above the S&P. So those are our big five. Now, what's the concerns? We don't love materials. I mean, it's still behind the big five, but there's been a surge. What does a surge in materials mean? It means things cost more to build. If materials cost more, then when you build something, it costs more to build it, whatever it is. So that would have a negative impact on PPI, which is Producers Price Index, right? So yeah, we don't love that. I don't think it's like panicky, but certainly we would rather see that stay down. Healthcare, and then you have energy, a little bit of a surge there. But if you notice what's at the bottom, these are our defensive sectors. Staples, what are the things we need? Utilities, we need to heat our house. We need to turn our lights on, etc. Okay, let's go to 133. Technology at the top, financials, communication services, industrials. Those are our favorites. Then all of a sudden here, what do we have? There's healthcare, materials, and consumer discretionary. Staples is here, utilities, and energy below. Now we get to the 66 day. This is our scored level. What are we scoring? We have communication services and technology still in the lead. We have financials and industrials right up there with them. Healthcare right below it. There's 5, right? Consumer discretionary is a little bit below, but okay, we still have 5. And there's enough momentum that I'm looking at discretionary. I don't love materials still. I'm not worried about staples. They're well below. They look steady, but that doesn't look like a defensive surge. And utilities is moving. Okay. I mean, I don't expect utilities to be bearish. I don't see enough of it to be like, oh man, look at this big surge. We'll watch. If we start to see these things continue moving while these things slow down and drop, we might be like, oh, hold on a second. There's a bit of a defensive shift. I'm not seeing that now. I'm seeing nothing but bullish things leading. Let's just take a look at the road ahead. Yeah, right. There it is. Those materials up top. We don't love this to be our road ahead. It's concerning. It tells us. We've got utilities and materials popping to the top. Energy. Yeah, that's a bit dramatic, Stephen. You're not wrong. Stephen said, I went a little conservative and reduced 1/4 point. Fair enough. Fair enough. Mine was confident enough on the 66 that I had already established I wasn't going to change my score. Usually for me, I'm informing the 66 with the 22, but not changing. So I'm going to leave mine alone. That makes sense. I mean, look, it is pretty dramatic. Yeah, we don't love to see that surge in materials. That's not helpful to anything. But for me right now, it's just a caution flag. Caution flag is up. I'm going to keep driving, but I'm going to be aware of it. And if things start to get worse, then I'll go ahead and make the adjustment. Good one. I like that. Okay. Any questions? Anyone else want to let me know what you did? I'd love to hear from you. And let's finish up with the VIX. Oh, the VIX. How are we going to score you? Okay. So Let's let me see here. We were a 1.25. So if you remember, what I said was for me to score it to a 1.5, I would need a lower high. We didn't get it. So this was our last higher low, and then we went up, and then we got a lower high here, and we turned. We got a lower low here, right? From this low to this low, and that gave us a quarter of a point. So if you look last week, oh no, we gave it a half of a point. And then nothing the week before. Okay. All right. I see where I was. Um, 1, 2, 3, 4, 5. Yeah, maybe I had already scored the lower low. I think that's what happened. I'm like trying to think why, but I think I'd already scored the lower low back here. That is what happened. You can see we broke it. So I got the lower high and the lower low in this 1 week, and that gave me the full half a point. And then nothing from here to here. And now we've gone up, but we haven't changed. It looks like it's coming to a top, right? It looks like it's here, and that would be the third point coming down. There's a high. There's a high. So that would be lovely, because from here we would think if I could come back down, this is exactly what I would expect for the March April rally. If we're going to get it, this is what it's going to look like, right? Where we bounce down, but it's not enough yet. We haven't gotten it yet. It looks close. It looks like we could get it this week. But for me, VIX is unchanged. Unchanged VIX. There it is. Final score, 6.75. That's a great score. It's still positive. Market still looks great. Not like, oh, it's pretty good. This is great. This is everything's in place right here. Could we veer from this? Of course we could. So what are the things that we're looking for? Right now, the VIX is going to be the earliest warning sign that we get. Okay, so let's talk about what that would be. This is our most recent low right here. We think there's a chance it comes down. Now, it could keep spiking higher, right? Our last high range is, and we touched it, but not really into this level. So, and we barely touched it, but we could go a little higher still. I mean, if the market were to be bearish on Monday, it might hit like this, but if we turn, that's still a lower high, right? You can see I kind of go off the ranges, and if it looks like that, you can see how that's coming down, coming down, coming down. If it does come down, and it comes down and only drops to here and starts to turn, you guys know what that means. That's a hedge. That is an immediate hedge. So at any given time, we've got something that's saying to us, if it's going to escalate, this is where it's going to look. We're going to see it. This is where the institutions just get a little careless and they hold their cards at a funny angle and they're giving you a look. Great, take it. Act on it. That's what I'm going to do. So the VIX has been the VIX has been the only weird part of the market, right? We've had these weird escalations and then it just sort of settles, and then it had a weird escalation and then it just sort of settles, and it really hasn't gotten above 16 during all of this. We had that one day, but for the most part, we've been sub 16, which is not high at any point. But this is where, if there's a concern, it will show up. So that's why I tell people, look, I'm not going to sit and wring my hands like, is there going to be a correction? If there is, it is. And this is where we're going to see the first sign of it. So I'm going to trade as I'm going to trade and go forward from there. Let's get to the watch list so we can talk about the trading plan as well. A couple of real quick things for the week to be aware of. Okay. Nothing on Monday for news. Definitely catalyst potential on Tuesday. CPE the expectations are to hold. So what would be a catalyst for positive momentum? 3%, even better, 2.9. If this drops into the twos, amazing. It's only expected to hold. In fact, the month to month is expected to tick up. On the full number, tick down on the core number. On year over year, expected to hold. On year over year for core, expected to drop. The core is just like when they take out, I can't remember what they take out. I'd have to look it up again. I always forget. Nothing on Wednesday. Then Thursday, we have retail sales. They had dropped. They're expected to rise. We would love them not to rise by much. Remember that it's very hard for prices to come down, i.e. inflation come down, if sales are high. And those two things don't play well together. What else do we have? Then we have core CPI, then we have PPI, producer price index. So Thursday is going to be a big day. Friday has a couple of reports, but it's really Tuesday and Thursday next week that we're paying most attention to. So we'll talk about those, which is interesting because we won't meet on either day other than our options meetings in the evening. Here is the Fed watch. We are a week and a half away with just no expectation of a cut in March. May, we're about 3-1, which is better than it was. So there's a few people who think, hey, you know what? Now, this number is going to start to really shift after this week. This week, if it's a positive surprise, I think that you're going to see this get closer to 2-1, where people are like, maybe they surprise us. If the numbers miss or meet, I think this is going to stay or go back to 4-1. And everyone's going to realize it's not going to be in May. June is the first time we have probability in favor of a cut. And the consensus is there's hardly any probability that we won't have a cut by at least July. But July is the 5th meeting. There's only 3 more meetings, September, November, December after that. That's what we're looking at from the Fed. And yes, let's be completely honest with ourselves. We are at the Fed's mercy to some extent right now. That is what the market is paying most attention to. Okay. Watch list. How will the Fed justify a rate cut if inflation increases? Unless they change from 2 to 3. You mean their expectations? No, they're going to keep their expectations at 2, but let's be clear, it's rarely at 2. That's their expectations. If you look at if you say 20-year or 30-year inflationary averages, you're going to see it's somewhere between 2.3 and 2.5%. That's your average, right? So, and remember that they're turning the Titanic. So they're not going to wait until it gets to their level and then stop, because then it's right. If they're ever doing that, that means they're definitely going to be too late. So there's going to be that. So they're going to justify cutting if they believe that it's still declining. Which is why if we see numbers decline here in CPI and PPI, if the numbers drop, then the percentages of the probability of them cutting will go up. If that makes sense. So, but if the CPI and PPI numbers have an unexpected jump, they won't, right? If any of our inflationary data unexpectedly jumps, that's going to, that we're going to start to see probability shift, kicking the can down the road. The Fed will not cut if they don't believe that we're heading at least towards that 2.5 mark, right? As long as it looks like it's going that way, then there's going to be a point where they're going to cut it, because they're going to say what they don't want is to choke the economy. They're stifling it a little bit, but they don't want the engine to die, right? So if it starts sputtering, it could get in trouble. So that's that delicate balance that that the Fed is trying to find with that monetary policy. Okay, Apple still trash until we see the buyers come in. And from this point, I would need a V and then a recovery for a higher low. We'll just keep watching. Here's the good news. Look how strong the NASDAQ has been despite Apple's struggles. Love it. Apple and Google can get back in shape. That just helps things even better still. AIG, waiting for the next trade, definitely on the list. Financials are strong. AIG is another. Look how strong it is. I got this trade here, and then it did this little bonus without me. I feel like it owes me another one of those. So I'm gonna see if it gives me a consolidation. 2-3 days. At that point, it's flagging and it's valid. Anything past that, we're just looking to see how that consolidation is going to come and when we can pop in. AMD, I think AMD is again, I'm not like, oh, we might be weeks away. This thing could literally give us just like 3 days. It comes down into this level. And when you see this happen, you're ready to go, right? Like this, boom, boom. And that's it. And then it's gone. Here's another example of that. 3 days gone. That was it. That was your chance. You don't take that flag, you're not going to catch that trade. So that's what we're looking for, are those flag patterns, those consolidations, or money's moving into these. AMD on the list. Amazon. I'm still keeping Amazon on the list. Theoretically, if you were anticipatory, you might have taken this trade here. And then it pulls back, and now your stochastics is turning here. I'm going to say this is support. This is where we are. If it takes out that, I think it's valid tomorrow, right? If it goes like this tomorrow, that looks like it's ready to go again and make its next move on the list. We're not even in the out of the A's, and we already have 3 stocks setting up. That's where we are with this market. AXP gave its signal back here. It's turned. I would expect that to be moving. It could pull back because of the market, but I'm not looking at that one as much as a viable opportunity. Boeing, nothing. It's the buyers have shown us no signs of life. BLDR on the list, right? What do we have? Industrial stock looks great. Starting to consolidate. Fantastic. BX. I don't like it. I don't know. I'm putting it on. I'm like, I don't like it. It's above the 50. It's holding the 50 and bouncing. It's been a little sideways. Yeah, okay. Let's consider it. Citigroup. Citigroup. Yeah, I held a little bit. I still have like this, like, come on, Citi. Come on, Citi. You can do it. But I've booked profit 2 different times. So it's made some money. It hasn't gone outstandingly, but you can see last time it didn't go outstandingly. Last time it didn't make it all the way. So I knew there was a chance. But I think a few people traded Citi, right? Made some money on that, hopefully. Caterpillar. I don't know. I'm going to watch that one and see. That could be setting up here. That could be setting up. I'm going to put it on the list because it could be. Industrials are still strong. Capital One's a little sideways. Oil, nothing. Costco got beat up on earnings. Nothing to do but watch and wait and see how that thing settles out. CrowdStrike's on my list for sure. I look at this, and here's what I think. That with everything else that's happened, this seems to be intact. We have a couple of little points here or there where it pops out of it, but for the most part, this looks pretty representative. So if this thing hits here and bounces, then yeah, I think we're ready to take a little swing. CSX, I'm a yes. Looks good. Industrials. It actually gave a signal back here, and I took it, and then I got out of it. So this was like a wash, but I'm like, hey, still valid. Still valid. Plenty of things that look good. Delta, I'm waiting. DHI, I'm waiting. Stevens carrying DSX. Nice. Got it. The Dow, Ford. I think Ford is a setup. The last trade didn't materialize, but it could be a little triangle pattern. If it holds the 50, trade valid for me. Fastenal, so strong, but it's not really setting up right. We thought it was going to flag here, and then it just sort of popped. So we missed that one. I missed that one. GBTC way overextended. GE is the looks strong as can be. Gold, strong as can be. Google, nothing there for us. It's got to break out of that consolidation, right? You can see that the line of consolidation on this is really pretty clear. It's got to bust out of it, and then it's got to catch a higher low. It does that, we're back in business. But again, communication services looks great, even though their top stock is not. It's strong. We need these back in. Home Depot on the list. Consumer discretionary showing some strength. I like that. IBM on the list. We've traded IBM off and on. It got back after its earnings, did this. Now, if it's going to do this, I'm ready. I'm here for it. I'm rooting for it. Intel. I don't know. Intel's a choppy one. Let's watch it. If that stabilizes, maybe it's choppy though, right? I'm actually not going to put it on. It's so choppy right now. IWM, nothing there. JP Morgan on the list. Strong, looks like it's starting to consolidate. Love it. Meta, I'm going to put it on our list. It's kind of funky, right? It's not really giving a signal. It looks like it could though. Microsoft. Oh, I think so. We have a pretty good list. Microsoft looks, I mean, I feel like this is confirming, right? Our watch list is strong and we have plenty of things setting up, including Netflix. Setting up. NVIDIA. Okay. I mean, we watched this flag right here. I think some people took that. What's next? The next potential trade could be setting up. This thing's gone a little parabolic, so it's scary for sure. If it's outside of what your taste allows, that's not a problem. You might just be a spectator. Picard looks strong. That's another industrial. So look what we have. We have financials, we have industrials, we have some tech and some communication services. Very broad, looks great. Hughes still looks strong. Ross Stores, I think Ross looks good. I'll put it on my list. Put it on my list. SMCI, overextended. Maybe if it starts to pull back. Maybe if it starts to pull back. SPY looks great. TPR, still setting up. I'd still think about this one. It's getting a little long. It needs to go soon, but you'll notice the same kind of thing happened back here before this move at the end of this move. So, be patient. Don't lose confidence. Let's keep watching it. Patterns are helpful. TSM, let's wait for the pullback, but maybe. UNP, put it on the list. Another railroad. There's the VIX. We'll see what happens. Waste management. It kind of gave a signal and it's just sputtering. Walmart gave a signal, starting to set up again. I'm going to put that on my list. Well, list is strong. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Got 20 stocks on the short list. XBI looks good if you want to trade an ETF because you don't have a biotech. That looks good. Materials is just too strong, but look, that's a nice bearish engulfing. Maybe we'll see a little pullback. Communication services a little sideways, but that's sideways despite Google weakness. Spring. Oh, it was spring back today, wasn't it? It was daylight savings. I thought I was like, okay, Bob. Oh, I bet that's going to get sandy too. Spring forward. Oh, spring forward. We lost it. I don't even pay attention to it. Now that we live on our phones, it just automatically does it, at least for me. I feel bad for Sandy because she's in Australia and they do their daylight savings differently than we do, and I guarantee that's what I can remember when I would coach people in Australia. Sometimes we'd always have issues around daylight savings. Energy, we don't like energy. moving the, oh, she's showing up too. She just showed up too, Bob. No. All right. All right. Here is financials. Sandy, we were just talking about you because you and Bob just showed up at the same time. We had daylight savings. I completely forgot. I had no idea that it happened until Bob said something about it. And so I just sort of automatically adjusted to what my phone said. But yeah, so we went and I think you guys change in another couple of weeks. So yeah, we gotta coordinate this on Discord for the next few weeks to make sure. So I apologize that I didn't even remember that it was happening. And anyways, so right now it's 12 noon Eastern time right now. Yeah. But I will process the recording and I will put it on. I'll put it on Discord here in like a few minutes so that you can watch what we did since you're up and ready for it. So as soon as we're done, give me 5 minutes and I'll put it on Discord and you can watch from the beginning. Industrials is up, looks strong. Technology as well. Staples pulling back a little bit. Utility, yeah. I mean, everything looks bullish. I don't love to see the energy and the materials because of the inflationary pressures, and we want inflation to drop. Real quickly, what are we working on this week for your trading plan? And Graylin, in every email that I send, there are 3 links. The core links. Those core links will show you these 3 pages. Number 1, welcome doc. On the welcome doc, you can see what our watch list is. You can download our historical posture. You can download a copy of the trading plan. There's a top 10 trading mistakes doc. You can download trade logs. You can download a market posture spreadsheet. All the materials that we use for the group, all the links that we use for our analyses, everything logistical is here in the welcome doc. The email, put my email address on the Discord or on the, okay, yeah. And then I'll also send a Discord as well because Discord's a great communication to join the community. Here is the links. You'll always have the links. So remember that we're not doing, this is in red because we're not doing these. We're doing Options Foundation and the content library. This is a big one. So here is where you have trading plan videos, market posture videos, trading foundations course videos, options videos, all kinds of, you'll get tired of hearing me speak probably. So I apologize for that. But, and then you have our Market Watch group channel, and you have all kinds of things in here. So here's where you can find like our midweek check-in, our opening bell, Options Foundation. So everything that we do is in here as well. Thank you, Michael. I appreciate that. This week, trading rules. We're working on section 3 of our trading plan. Every week we do a new section. We've already done personal info on week 1. We've already done market forecasting. Now we're on rules. So for every system you trade, you need a set of rules. Every system you should have what markets or stocks am I trading, time frames, right? What charts do you use? How do you position size? What are your entry rules? What are your stop rules, your exit rules, your trade management, your tactics? Basically, all of the rules of execution should be detailed. If you have a bounce trade system, if you have a breakout trade system, if you have a continuation trade system, if you have a Bollinger Brand breakout system, if you have a moving average crossover system, whatever system you have, they each need their own very specific set of rules. So this is what we're working on this week. If you have a core system, focus on that one. If your core system's designed and you're working on a secondary system, great. If you trade signals from a newsletter, you should create rules for how you trade that newsletter. They're going to give you some of this. You need to fill in the rest, right? So we want to make sure that we're working off a very specific set of rules and guidance. So that's what we're working on. Now, tomorrow morning, check the time. Sandy, you may want to just like Google it just to like current time, because for the next couple of weeks, it's going to be a little weird. I was saying before you popped on, every time I've worked with someone in Australia, New Zealand, and we get to spring or fall, because you guys are like 2 weeks off of us doing your daylight savings, it would just be a nightmare. So feel free to ping us on Discord. I'll look for it. Other people will look for it, and we'll respond to you there to make sure that we all get through this to where we're back into a synchronized time zone. It's good to see everybody. Like I said, I'm Sandy and Bob. Go to Discord, look for the link. I will put it there. I will put it there as soon as it's ready. It just has to process. I'll put it on YouTube, and then I'll drop the link and it'll be available for you. All right. It's good to see everybody. Graylin, once again, glad to have you. Everyone have a great rest of your weekend. I'll see you in the morning. Remember, 9:15 a.m. Eastern time, 15 minutes before the market opens. As always, happy trading.